time to talk to Ozzie Jurock, our real estate expert. Hello, Ozzie.
Hello, Wendy.
All right, the Bank of Canada did it again. They said they would. They've raised the rate.
Yes, we have 7 times in a row now, and that means that tomorrow morning the prime rate as well is going to 6%, and that may make an impact, actually a severe impact, on all variable rate mortgages. It doesn't make any impact on the fixed one, but the variable ones do. The overnight rate now stands at 4.25%, and already 2 major banks announced they'll go tomorrow morning to 6%, which is the bank that the rate that it gives to its best customers. The best mortgage you usually can get is 3/4 below the prime rate.
Yeah.
So the best now is about 5.25%. Now, a year ago, the rate was 3.25%, coming from 4% prime, and a $100,000 mortgage, the payment would have been $486. Today, that same payment is now 5.25%, and it's $595 a month, or $109 more than it was a year ago. Now, the average mortgage on the Lower Mainland is actually closer to $300,000. So the payment there would be $1,458 last year, and now, as of tomorrow, it's going to be $1,787, or $329 more than it was. And that's almost $4,000 a year more than it was last year at this time.
And Ozzie, do you think it will continue to go up in these tiny little increases for the next
while?
Well,
the thing is, I think so, and the common wisdom, by the way, and I'm not an economist, but most economists today said they think this is it. But I think we'll always overshoot, because what the bank is trying to do, in the US they've been doing it 14 times, in New Zealand 14 times, Australia and England 14 times. It takes more time for us consumers to stop borrowing excessively or exuberantly, and I'm afraid we're going to have a couple more increases.
You do? Okay, so do you think, though, eventually, if we've only done 7 and all those other countries did 14 increases in a row, is our market going to start slowing down a bit?
That's the goal. I mean, take a look. It's not normal to have real estate value increase at 26%. It isn't just that. We have gold, silver, oil, everything is going up, gasoline. I mean, anybody that's buying anything today knows that the so-called core inflation doesn't apply to them. We're paying a heck of a lot more for things than we did last year. And for us to stop borrowing at this rate, they will perhaps increase the rates more than we normally need to, and eventually it comes back down.
All right, so again, this is somewhat of an anomaly, because you're going to show us some hot markets, but all of the markets are still hot out there, but these are some of the bigger increases. Yeah,
and I think that everybody talks about Vancouver, and we see the $1 million house on the west side, and it's clear that we went from 549 to 695.
Wow.
26% increase. That's whopping. But the average person says, well, how can I afford that? But had you gone to Port Alberni, put 5% down, the price went from $139 to $184,000. So on a 5% down payment or $7,000, you would have made $45,000 profit in Port Alberni. So it's not just Vancouver you can do well. There's a lot of smaller markets where you can really do well. Now, Nanaimo, again, with a $15,000 down payment, you would have made a 19% increase, or a good $48,000 profit. And that's all in 1 year. And remember, on your down payment, that's 300% increase.
Wow. All right. We'll leave it at that, Ozzie. Thank you so much. We'll talk to you in a couple weeks.
Thanks for having me.
And if you want to purchase a copy of Ozzie's newsletter, lots of good information in there. You can call 604-683-1111, or you can check out his website at www.jurock.com.